That music is so dramatic, right? I feel like, and that's like just the stock music. But what's going on, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. Before we get started into anything, I just want to let you know that my Patreon numbers have started to go up, but not enough from our Chaos crew. So make sure that you guys who are in the Chaos crew are aware that we are moving all of our platforms where all of you guys are scattered around under one roof, and that is on Patreon. So make sure that the link that you're seeing in the chat is a place that you visit. If you're not in the Chaos crew at all, still go check out that link so you can become part of the crew, where you can get access to our Discord group, as well as other various videos where you get my list of stocks that I'm watching, as well as many other tools and resources to help you in this crazy and chaotic market. So make sure you go in and check that out. What we have on the docket for today is Apple. Some crazy numbers coming out from them, some, I guess, crazy guidance numbers coming out from them that are more indicative of the macro environment that we are living in right now, more than anything else. But we're going to be talking about that, as well as, speaking of macro, some interesting notes from some keynote speakers in CNBC's Alpha show, Seeking Alpha show, or not Seeking Alpha. You know what I'm talking about. So on their Alpha program, that's something that we're going to be looking at. I think that that's certainly worth chatting about as well. And let's not forget Shit or Legit, people. Shit or Legit's going to be at the end of the show, so make sure that you're putting SOL in your ticker that you would like me to take note of or react to on whether or not I think that your stock is Shit or Legit. Put SOL and your ticker in the chat as well. Would love to see you guys participate in that way. And let me shout out the starting five. We got Savvy Money Show, Kevin Hawthorne, John Gosselin, Oliver Thorpe, and Karem. You guys are our starting five. If you're not a part of the starting five, it could be because you're not subscribe to this channel or hit that notification bell. So make sure that you do that to get notified when I go live at 3:45 p.m. Eastern time, Monday through Thursday. Tomorrow we have some great earnings that are going to be reported that I will be reacting to the likes of Nike, Bed Bath & Beyond, as well as others. So you're not going to want to miss that show. So again, make sure you're hitting that subscribe button, hit that notification bell to get notified when I go live. What's up? Hey, I appreciate NASCAR says I feel smarter when I listen to that dramatic music. Yeah, it's interesting music for sure. It's like so I use, for those of you guys don't know, I use StreamYard to go live. It's a platform, it's a web-based platform, and that's just kind of like one of their generic ones. I'm actually trying to work on a countdown right now. Remember the countdown we used to have when Fat Man Zoom was around? Trying to work on something like that, similar. Now that Fat Man Zoom is no longer a part of the stream regularly, feel like it makes sense to just kind of switch that up a little bit. So we're going to be talking about that too, Alonzo. Yes, energy in general has had a hell of a bounce. And speaking of which, let's go ahead and just take a look at the overall markets. Right now, I'm seeing that the S&P 500 is up 2.5%, which is good for 88 points. The Dow's up 672 points. The Nasdaq's up 270, which is good for 2.5% as well. Crude oil is making a monster move. WTI crude is up 4.5%, folks. Lots of reasons as to why. We're going to get into that in a moment as well. Looking at a couple of other things, Bitcoin has made a hell of a turnaround as well. Now back up over 19,500. It was well below that earlier today. Now up 2.5%. So let's get into a couple of things. First things first. Before we get into it, just to let you guys know what we are talking about, we're talking about the fall of Apple today. It was down 4%, is starting to make a little bit of a comeback as to why that is, as well as, are we in a 10-year bear market? Are we going to see a lost decade? That narrative is starting to be spun around and in various parts of the media. So I want to give my spin on that, my take, and where we could be headed as far as that's concerned. You guys so far have been voting in the poll. And 53% of you say yes, 47% of you say no. So looks like a pretty decent mix here on opinions as whether or not we are going to be headed into a lost decade. And so I'm excited to have that conversation. So before we get into any of that, energy is making a huge move. One big reason for today's move, I think in particular, is because of Hurricane Ian moving through. And I don't know if you guys have seen this, but like there is some crazy footage. The storm surge in Fort Myers area is absolutely insane. So for those of you, I know a lot of you guys are watching. I don't know if Alan is watching. I know that Jeed as well as Alan in my Chaos Crew group, they're Kevin Hawthorne. You know what, Kevin? I'm not familiar with where Lakeland, Florida is, but if you are also in the wake of that, I certainly hope that you guys stay safe. Make sure that I hope that you like bugged out and that you're not uh, in the path of Ian, but it looks pretty rough down there. And that is one big reason why we're seeing that. It's just historical thing. Historically, when we see major hurricanes make landfall onto the U.S., you see a surge in gas prices, oil refineries, and that sort of thing are at risk, and that's kind of one of the big reasons why. The other one is the natural gas leak that we talked about yesterday is certainly making an impact on oil as well. Oil was making the surge this morning before we saw the run up in on the indexes. So energy in and of itself, I think is making a huge move. You guys heard me talk about PXD yesterday. Here's the chart on PXD. I think that this is pretty much what we were talking about yesterday. The move that we were looking for, right? Still surging, still going nuts. Looking at Marathon Oil as well. This stock is just absolutely insane too. If that's up 6.25%, that's jumped 1% since just 3 o'clock this afternoon. So it's still making a huge move there. So Marathon Oil, as I'd mentioned before, not just Marathon, but PXD, Pioneer Natural Resources was another one that I talked to you guys about yesterday. That's up 4%. We can take a look at ExxonMobil as well. Remember what I was mentioning to you guys? I mentioned that it didn't necessarily matter what energy stock you got yourself into, as long as you were doing your own research and making your own decisions. Obviously, that you had my blessing, so to speak, on where we could see the move here on energy. I think that this is going higher. Looking at Exxon right now, looking at where everything else is headed, I think that there is a lot of reason to believe that this is not over. A big move today, so we could see a little bit of a move further down just because of the amount that this has moved up. But energy in general, in my opinion, is still going to go nuts. Bodie Beard says natural gas prices really not have moved that much. Not yet, but they will. They will. In my opinion, I think they will. Alonzo's in Orlando. Yeah, stay safe out there, Alonzo. Okay. So just kind of wanted to recap that real quick on what we saw with energy today in general and what oil was doing. So pretty crazy move there. All right. So Apple took a huge hit today, and it has been rough for the major tech stock. I wanted to kind of show you guys a little bit on what Apple's been doing and where it could be headed from here. So let's take a look here and find out as to why Apple had made such a move down. It is moving up, but I think it's more of a reaction to the overall market rather than just Apple in general. Let me pull this up here real quick for you. There we go. So here's your Apple chart right now. This is the weekly move, and I think that it's safe to say that Apple's in good hands here. On the weekly chart, I think that it's going to be just fine. It's that I think the support here around 145 to 138 to 145 is going to be that area to watch. It seems to be holding it up there pretty nicely, despite the 4% move down this morning. Take a look at the 5-minute chart to give you an idea of what's been going on today. You can see that it opened up the pre-market here and crashed down, as I mentioned, around 4.5%, and it started to make the move back up. But why did it make the move down in the first place? Well, Apple shares fell 4% in pre-market this morning after a media report indicated the tech giant was pulling back from its plans to boost iPhone production due to a lack of demand for its overall product line. However, Wedbush Securities' Dan Ives said that the key for Wall Street was the iPhone 14 Pro model, and that's what's really being impacted here. Wedbush has an outperform rating here on the iPhone 14 or the Apple stock, Apple company. Much like most people, I don't think there's any analysts out there that are bearish on Apple at the moment. But I think that the report of a production cut due to a softer demand will send nervousness into the market, which is what we saw. But the Pro model is the key focus for Wall Street. One investor noted that Ives had said in that report that overshadows the underlying demand for the iPhone Pro units, and that this means higher ASPs and a clear tailwind for Apple for at this pace. Dan Ives wrote that adding that wait times. Dan Ives wrote that adding that wait times have extended into early November for some iPhone 14 Pro units, and Apple is simply shifting production from iPhone 14 to higher end models, which will boost the average selling price and be a clear tailwind for Apple going into the next year. So the big move down was a response to production cuts for the iPhone 14 Pro. But Dan Ives is making the argument that we are seeing an interesting move here because of the push to more expensive phones. So Apple, probably the best marketing company out there, probably isn't a better marketing company out there than Apple. They have it figured out. So if they want to shift their customer base to more expensive phones, that's what's going to happen. So don't be surprised if we see Apple here make the move to buyers getting into more expensive phones, and their earnings reflect that. I mean, and at the end of the day, does this make Apple a buy, sell, or hold? In my opinion, I think it's more or less a hold. You guys saw that, that 138 to 145 area that I was looking at on the chart was a decent spot to look, which means that there could be potential downside here, with the stock getting ready to close around $150 a share. I think that there is a little bit more downside. So this is why I'm saying it's a hold. Apple stock's always a hold, in my opinion, anyway, because they are Apple, right? This is a stock that I would say you don't necessarily trade it. You just buy it, you own it forever, and let that be that. This is just one more little blip in the radar for Apple for the grand scheme of things. I don't think that there's anything that they're going to have to worry about. Their estimated earnings per share for the end of October is at $1.26, $88.76 billion in revenue is expected. I don't think that there's any risk of that being in jeopardy at all whatsoever. I really don't. Jeff Chow says more expensive. Yeah, seems to be the route that they're going. We'll see how it works. Savvy Money Show said Apple's expert marketing, they know how to round up sheep with a single phone. And that is the fucking truth, bro. That is the fucking truth. Jeff Chow says, I'm still sitting on my iPhone SE. Yeah. No surprise there, right? I find that most iPhone users hang on to them as long as they can until Apple does what? They manipulate their software to force you to buy a newer phone, because that's just how they roll. And they've admitted as such that they've done that before. And yet you guys still buy iPhones. Something chiming in here from CNBC. I have a little video that I wanted to show you guys on this as well. In particular, from a correspondent from CNBC on this particular topic. So here's what he has to say.
Morning, John. No, I think that frames it pretty well. More broadly, I think the question is, will a consumer that is increasingly pressured by high interest rates and perhaps some difficult comparisons from a year and 2 years ago when they were home and spending on consumer electronics, will Apple be able to continue to engage and command dollars from this consumer? That's the real question, and it extends not just to iPhone, but also more broadly to Macs and iPads, which have had, a really good years during the pandemic and over the last year, and as well the watch, which is arguably the most discretionary item that Apple sells. But it all goes back to, how healthy is the consumer, and ultimately is Apple's product positioning, targeting a somewhat more affluent consumer, able to continue to persist healthily going forward.
But the risk, it seems to me, is that Apple's stock is still actually up more than 3% over the last 12 months, which is pretty unusual. What will it take for Apple to go more in line with what some other very strong companies like Microsoft?
Absolutely nothing. There's not going to be anything that, in my opinion, is going to crash Apple's stock. We saw, obviously the last real crash you saw in Apple stock was when the overall market crashed during COVID. And I think the only thing it's going to take is something like that. In my opinion, we're seeing still the consumer out there, demand still very strong for Apple, despite some of the slowdowns. And yeah, you can make the argument that we're heading into a recession, but at the end of the day, Apple's been through how many recessions since the 70s? I just don't see how there's going to be any reason to believe that, or any reason to actually sell your Apple stock, which is why it hasn't really moved all that much. 4% down pre-market was actually quite significant, but it's back up. It's still red on the day. But Apple right now is, let me just reconfirm. Apple is doing quite well despite having that 4% drop. It is now only down around 1.25%. Actually, that's what it closed at today, now that the market is officially closed. So, in my opinion, again, stay the course on Apple. If you are an Apple investor, in my opinion, you do nothing about this news, macro or otherwise. I think you just continue to hang on to the stock because it's still going to crush it. That's just my opinion. Bodie Beard says Apple flagship phones are still cheaper than Samsung flagships. No, they're not. What world are you living in, bro? I you know what? Correct me if I'm wrong. Compare an iPhone 14 Pro to a Samsung, what is it? Galaxy S. No way. Don said, "Oh yeah, I sold it off a while back." I mean, he still didn't sell all of it. Yeah, Oliver Thorpe. I don't know what you're talking about, Buddy Beard. Find me a comparison. Now you're gonna make me do this. You're gonna make me do this. Samsung Galaxy S22 Ultra, right? The S22 Ultra. I'm just Googling price. Is S22 Ultra is selling at Walmart for $980. If I look up Apple iPhone, let's not get started on the watches either. The Apple watches are ridiculous. 14 Pro price. Well, all the ads here on Google are showing me $0. That's not right. Let's see. This is Apple's actual website. Are you going to give me the price or not? $999. So it actually is more expensive. It's $1,000. The phone's not a year old, bro. You can't find it. iPhones are free. They lease them. And at the end of the day, you get more in your Samsung phone than you do Apple anyway. So conversation's over. If there, see, Savvy Money Show says, there's a video of Steve Jobs signing a letter saying Apple stole the tech from a penny stock, it wouldn't. No. Oh my goodness. All right. I wouldn't mind if Tim Cook stepped down. Says some is that Anuki? Anunnaki, bro. 6 months in the Android and it's trash. We could have this conversation all day long. The fact of the matter is, Samsung's just a better phone, period. And I have iPhone users that will admit that. Here's the biggest reason why iPhone users won't switch to Samsung or any other Android phone for that matter, and it's because it's too much of a pain in the ass. iPhone's got your shit on lockdown. It makes it hard to transfer everything, right? Your contacts, all that bullshit. Everything. The only reason that y'all are still into iPhone is because y'all belong into a cult. Just admit it. It's okay. It's okay that you belong to a cult. You just have to admit it. I'm an iPhone user with a Samsung phone. That doesn't make any sense. They don't suck. All Don says is that they suck and won't tell me why they suck. Samsung has a better phone. They have a better processor. They have better screens. My shit don't break like iPhones do. I can give you all kinds of things that are better than iPhone. My phone folds, which is pretty fucking awesome. iPhone. You know when iPhone's going to come out with this? 5 years from now when they steal it from somebody else. This is bullshit. Don tried Android for a week, probably after switching from an iPhone, which means that you didn't even give yourself enough time to actually enjoy the phone. You're just like, nope, this isn't anything like iPhone, so I'm just going to dump this and go back to my iPhone. Get that plastic trash out of here. Yeah, so I can drop my iPhone and just crack it like everybody else's. Tom Hunter says, I bought calls at the bottom this morning. They sent them on their way. Yep. If you bought calls this morning on Apple, you are sitting pretty. You are sitting pretty. Oliver Thorpe says, Apple's a stronger, sexier brand. That is the only reason. And I don't disagree with that. I used to work a project for Samsung, and they have an inferiority complex to Apple. That is also very true from a brand perspective. And this is something that I've continued to say. Apple is the king of marketing. That's what I said at the top of this topic when I started talking. There is no better company that's better than marketing than Apple, period. That's why they are a better company in the US. Let's not forget that Samsung outsells Apple hand over fist globally. But Apple just has a better marketing scheme, especially for US users. 75% of the globe still is comprised of Android users. 25% of the world uses Apple, which mostly consists of the US. Don, you're just digging yourself a bigger hole, bro. That argument doesn't even work. Android users are so stupid they'll buy a phone broken, saying it folds in half. That is a stupid ass argument. Try again, bro. Also, why do people defend Apple like it's their mom? You start talking shit about Apple, and it's like I told them that their mom was fat. I get real butthurt over that. All right, moving on. What's up, Tamp in the house? Good to see you. We just recorded some of our Chaos Sports. If you guys haven't heard, yesterday we talked Chaos Sports channel. We're talking all things football on that channel. So Ann Tamparello, you guys know her. She's been here on the channel before. She's also on my DC TV channel that I go live on in the mornings. We started Chaos Sports. I am pumped for that. We have our top 3 NFL games to watch this weekend, as well as our top 3 college football games to watch this weekend. Those videos will be coming out tomorrow. I will share those loudly and proudly. Be kind. We're still working out the kinks and stuff like that, but it's our first stab at it. We're going to continue to get better, but I'm super pumped for that. I think that channel is going to actually do extremely well. This is also a stupid comment. Do you know what my iPhone can do? Text people. So can mine, bro. A full photo and video. So can mine. You're just making it worse on yourself. Ann says I spoke too long today. That's okay. Everybody does when they first start out. So we'll get it worked out. Speaking of talking too long, getting on to the next topic, and we touched on this a little bit on DC TV, but I wanted to bring it here to you guys. And as you see in the chat, I put out a poll: are we headed for a lost decade in the stock market? Yes, we are. Or no, we're not. Those are the options here for today's poll, and it is split right down the middle. 49 of you voted It's split right down the middle as far as yes, we are, no, we're not. Before we get into it, make sure you hit that subscribe button, hit the like button as well. We got 19 likes, which is kind of weak sauce. We're getting there, but we're getting to the likes that I would like to get to. But let's see if we can get to 50. It's a slow day, which I totally understand and I get. But let's see if we can get to 50 likes. If you guys wouldn't mind hitting that thumbs up, I certainly would appreciate it. Let's go ahead and get into the Patreon news as well. If you guys haven't, check out Patreon. Own the Chaos crew. For those of you who are in the crew, I see a couple of you guys in here that have badges next to your name. If you have a badge next to your name, you will no longer be getting Stockwatch Sunday on YouTube. You will now be getting it on Patreon. Couple of reasons as to why. I've explained them to you guys yesterday, but one of the big reasons is YouTube charges 30% for you guys to be members on my channel, which is crazy. So if you guys want to continue to be part of the Chaos crew and get all of those benefits along with our access to our Discord group, access to all the trade alerts, and Mike Hudson is going to be helping out with the long-term trades and stuff like that. If you guys want to go check that out, go to Patreon, go to Own the Chaos Patreon. The link is in the chat. Click on that, please. Would love to have you guys over there. I'm seeing a decent number come over to Patreon, but not nearly enough compared to the Chaos crew members that we have. So make sure you guys are checking that out. All right. So are we headed into a lost decade? If you guys don't know what a lost decade is, it's essentially, after a recession, how long does it take for the stock market to recoup, to recover, and start making gains again? When do we go back into a bull market? And one of the more notable times we saw a lost decade was about 40 years ago, back in the 60s and 70s. So this is really, 70s and 80s, I guess, is probably more appropriate. But during that lost decade, back during that time, through from 1968 to 1982. So yeah, 60s, 70s, 80s. 1968 through 1982, S&P 500 just returned just 4%. Just 4%. And could we be headed into another situation in which we see that again? There's a lot of talk about this, and I kind of wanted to direct some attention towards keynote speakers in the CNBC program that has been out here. So if you guys haven't checked this out, I think it's worth looking at. If you guys haven't looked at, sorry about this. Delivering Alpha is the CNBC program. They have plenty of guys on here. So Ken Griffin, the CEO of Citadel, I know how we all feel about him, but thought it was interesting, some of the things that he had to say. Let's see if we can bring that up. Here we go. Watch this.
Has the Fed oversteered, as some suggest?
So I think they have one of the most difficult jobs you could ever imagine, right? You're trying to figure out what will be the trajectory of inflation against a backdrop of a labor market that we've never seen before. We don't know the impact of productivity from people working from home, for example. We just don't know. We also don't know what the next move out of Washington is going to be. There's been a lot of regulatory increase out of Washington, which of course is tough on the economy. There's been a tremendous amount of spending that we as a country just shouldn't be incurring, that again is pro-cyclical, pro-inflation. So the Fed's had a really difficult job to try to use a very blunt tool, interest rates, to address an overheating economy where Washington keeps making moves on the chessboard that turn the oven hotter. So it's a tough job. The Fed came out pretty aggressively and then lost some credibility this summer as the financial conditions started to relax. And the most recent moves by the Fed, I think, are about reasserting credibility. They want to be very clear cut. We're going to put inflation back in the box. We're going to take care of this issue. But they lost some credibility this summer when the market started to think the Fed was going to come off of a steep trajectory.
To pivot.
To pivot, right? And that was exactly what the Fed didn't need.
Has the Fed oversteered?
So that was one comment from Ken Griffin, CEO of Citadel. I have to hesitate when I listen to things from him, only because there's got to be self-interest in here, right? Citadel hedge fund, billionaire CEO, and a known short seller, right? And so this is something that I think, are we headed into something like this? I think you have to take it from him with a grain of salt, but he makes some fair points, right? The Fed has lost their credibility. And we heard that from Jeremy Siegel yesterday after his absolute meltdown that we saw from Friday's CNBC show, halftime report. And so it is interesting. If we continue to go down this road, if we continue to see hawkishness from the Fed, I think it's certainly possible for us to enter into some sort of lost decade. But what I will say is that we're seeing an environment still where wages are finally starting, and I'll say starting because who knows where they'll end up. Wages are finally starting to make some sort of headway on inflation. Not saying that it's going to forever, but we're also seeing the labor market not really relax all that much. We are seeing some of that happen. If we go down this road, we'll see it a lot more. But I don't think that we're going to see some sort of lost decade. I think a recession certainly is on the table, and we're kind of already seeing that in Europe, right? For those of you who are watching me from across the pond, probably could see an interesting dynamic here. Let me know if you guys are watching from my UK audience, if you guys are noticing, hints of recession. I'm not even talking about light recession. Are you seeing mass layoffs? Are you seeing things happen? Now, I'm seeing some things slow down. Housing prices have come down. We've started to see that a little bit for the first time in 10 years. Not necessarily indicative of an all-out, full-blown recession/depression, but the slowdown is certainly there. Interest rates are just going sky high. We saw mortgage rates hit 7% yesterday, and I think that that's certainly something to take note of. Also, Stanley Druckenmiller had some interesting things to say about this as well. I wanted to get your guys' thoughts on his comments here. So let's go ahead and keep an eye on this too. Or watch this.
Is it 2022? Is it happening?
We are in deep trouble. So everything I said at those colleges is worse in terms of the metrics, except for one thing. And what I miscalculated was I didn't calculate zero rates. I used 4% rates. But the only thing Donald Trump and Hillary Clinton agreed on in 2016 was don't cut Social Security, don't cut entitlements. So nothing was done. Joe Biden has excoriated Rick Scott because he dared mention maybe we shouldn't be increasing senior pays. But if you look at the reversal I just talked about, and you use the CBO estimate, which is rates at 3.8%, which I think, frankly, is pretty optimistic, given all the things we've talked about. By 2027, the interest expense alone on the debt eats all healthcare spending. By 2047, it eats all discretionary spending. So we're now getting into fiscal dominance. By the way, by 49, it eats all Social Security. We're getting to the point now where the interest expense on the debt is so high that it's going to eat up our ability to basically service the next generation. I'm not even sure about the current one.
Okay.
I brought some cyanide if you'd like one.
No. I'm thinking about that, and I'm thinking maybe we'll be okay. but
yeah, because we'll be dead.
Yeah, that's what I mean.
So some pretty funny stuff there at the end, just to kind of make things light. But there's some good points that he makes, right? The debt crisis is a huge issue, and we can't just continue to print money and assume that things are going to get better as a result. So what's the true answer here? And I've started to dive into this, but my DC TV folks have been on point, and it could be the answer could lie in something like a Bitcoin, something that's finite. Something that creates demand with limited supply. I think that that's going to be the answer. Could we be seeing the end of the dollar as we know it? There are some arguments that you can make towards that. Currencies like the dollar last an average of around 200 years, and we're almost there as far as the dollar is concerned. It's strong now, but I think that we could see a huge move to the downside as far as the value of the dollar is concerned. Pulling money from the system, says Bodie Beard. Yeah, that's kind of already happening, but I don't think it's going to be with any kind of soft landing. So Oliver Thorpe says no real layoffs here. Just talking about living across the pond. House prices still same announcements this week. Can see us hitting a recession soon. Inflation is massive, and new policy doesn't address that. Energy is also nuts. Yeah, for sure. Dave Perlmutter says that the Fed releases their own digital currency, wouldn't they find a way to get rid of other digital currencies? No, I don't think so. Here's the other thing. If the Fed releases their own digital currency, that means they have the ability to manipulate that digital currency. You can't manipulate Bitcoin in the way that you can manipulate something like the digital dollar, right? You can print and take away the digital dollar just like you can the physical dollar. And so I think that Bitcoin solves that problem. Not only that, but Bitcoin gives you the ability to keep a big government out of it. And if they create their own digital dollar, I think this makes a stronger case for something like Bitcoin. Just my opinions, and I'm not by any means a Bitcoin expert, but because of what I do know about it, the digital dollar or the Fed releasing their own digital currency isn't going to do anything to Bitcoin other than perhaps increase demand. This, in my opinion, actually makes the case for Bitcoin even stronger. Danny Lovell says El Salvador is laughing at us all now. Yeah, I mean, at some point we're going to see Bitcoin go absolutely nuts, and I think it could be soon. The average bear market for Bitcoin since 2011 is around 363 days ish. I have to correct myself if I'm wrong on that, but we're getting close. About 322 days of a crypto bear market that we've seen, crypto winter. And it's been pretty light winter as well. If you guys haven't noticed over the last week or so, Bitcoin's actually been outperforming the SPY and the overall indexes. I'm not going to sit here and be a Bitcoin maxi and tell all you guys that you have to put all your money in the Bitcoin. But some of what we're seeing in the overall economy and what the Fed's doing, Bitcoin solves these problems just based off of what I know. Dave says they want to track and be able to control where we spend our money. But that's why, again, it further supports the need to have a decentralized currency. If the U.S. wants to ban Bitcoin, they can go right ahead, but the rest of the world is going to leave them behind. And I don't think that's actually going to happen. The U.S. now is the number one country in the world for mining Bitcoin and really other cryptocurrencies as well. I don't see that happening. Can it happen? Is it possible? Sure. But I just don't see how the U.S. is going to allow themselves to fall that far behind in the crypto space. I don't know. We'll see. Ken Griffin also spoke about crypto a little bit during the Delivering Alpha meeting, basically talking about how this dynamic between the old heads and the younger crowd within his own company. More and more people within their 20s are getting involved in cryptocurrencies and are seeing the value there, whereas older individuals just aren't choosing to educate themselves. And he fully admitted that. So, Don says they won't ban it, but it won't be as decentralized as people think. Fair. Could be. It depends on where you park your Bitcoin as well. Would I choose Bitcoin over Ethereum? I think it depends on what you're trying to do. Bitcoin is seen by the IRS as an asset. So if you're looking to hold on to an asset rather than holding on to something like gold or silver, precious metal, something like that, that would be considered an asset. You would hold on to something like Bitcoin. That's a digital asset. It's not necessarily a currency in the IRS's eyes, whereas Ethereum could be classified as that. So it really just depends. To me, if you're looking for something long-term, you're looking to just continue to build onto something, I think Bitcoin's probably the answer. Ethereum has a lot of use cases, and I think it's going to move with Bitcoin no matter what. But I think that if you're just looking to park your money somewhere, I think Bitcoin would be a good place to park it. If they want everybody on the Fed or the digital dollar, what would stop them from taking out Bitcoin? There's a lot of things that would stop them from taking out Bitcoin. Bitcoin is like the internet. It's like trying to stop the internet. It's a secured network that is unbreakable. And it's becoming more and more secure with each Bitcoin that's mined. They're not going to do away with that. Not only that, but first mover advantage is the other thing. People aren't going to leave Bitcoin to a digital dollar that they can trust. You think that they're going to, people who already own Bitcoin, especially Bitcoins that are especially Bitcoin owners that understand it, are going to switch from a currency or asset that they trust to go after the digital dollar? No. You're going to trust the digital dollar after what the Fed's doing now? Fuck no. Is it possible? I think it would be really, really hard. Next to impossible. Exactly, Bodie Beard. It says, who's going to buy a Fed crypto after all they've done with the dollar? 100%. It's going to be a real hard sell. A real hard sell. But with that, guys, I'm going to let you guys go a little bit early. It's been a great show. Nobody put in any of their shit or legit stocks, so we're just going to skip that for today. We'll be back tomorrow. We're going to be covering Nike's earnings as well as Bed Bath & Beyond and others. So make sure you're hitting that subscribe button, hit that notification bell, as well as going to Patreon and checking me out there. If you guys are part of the Chaos Crew, we're making that shift. There's several hundred of you in the Chaos Crew, and I will say that there's not even 100 of you hanging out in Patreon. Just rest assured that if you are a part of the Chaos Crew and you signed up under WeTrade HQ or through YouTube, I will no longer be servicing those platforms. I will only be servicing my Patreon users over there on over for the Chaos Crew. So we're making this switch for a lot of reasons. It's going to be easier on me as someone operating on the back end, but it's also going to be easier on you. It's going to be easier way to communicate. I have all of you living under one roof. It just makes my life easier for everybody as well. So thanks so much for tuning in. Make sure you go check out Patreon. Make sure you sign up there. And thanks so much for tuning in. I'll see you tomorrow at 3:45. Bye.